Uncertainty about the war in Ukraine is continuing to weigh on Wall Street. That's our top story today on the Wall Report. I'm your host, Greta Wall. Ukraine's foreign minister says the latest round of talks with Russia failed to make any progress, despite Russian President Vladimir Putin previously saying there were, quote, positive shifts happening. Now, Ukrainian officials say they're also concerned that Belarus may soon send its troops into Ukraine to support Russia's offensive in the country. President Biden also spoke with Ukrainian President Volodymyr Zelensky today. Zelensky says the two agreed on further steps to support the defense of Ukraine and increase sanctions against Russia. And the major indices are mixed today, with tech stocks falling sharply. The Dow is on track for its fifth straight losing week, despite rising in today's session, while the S&P 500 and the Nasdaq will log their second losing week in a row. And energy prices are higher again for the second straight session. West Texas Intermediate crude futures rising more than 3% today to over $109 per barrel. Meantime, Brent crude futures are up more than 2.5% at over $112 per barrel. Both, though, are off from the peak they hit at the start of this week. Gas prices, though, in the U.S. are still rising. The national average price for a regular gallon of gas hit a new record high at over $4.33 today. And those rising energy prices prompted Goldman Sachs to downgrade its outlook for the U.S. economy. Goldman analysts slashed their 2022 GDP forecast. The group now expects growth of just 1.75% this year. And that's down a full point off from the consensus estimate for 2.75%. Goldman cited rising inflation and higher energy prices for that downgrade and said recession risks are rising. The group now believes the chance of a recession in the U.S. next year is between 20% and 35%. Now, meantime, President Biden is calling for the U.S. to revoke Russia's most favored nation status as a member of the World Trade Organization. He said the EU and G7 nations will also do the same after Canada did so last week. Now, Congress must act to revoke that status, which would then allow the U.S. to impose tariffs on any Russian exports to the U.S. The U.S. imported $29 billion worth of goods from Russia in 2021, the majority being oil and gas products. Biden is also set to sign an executive order banning U.S. imports of seafood, non-industrial diamonds, and vodka and liquors from Russia. And as the U.S. continues to target Russia's economy, Congress is set to send aid to Ukraine. The omnibus government funding bill is headed to the president's desk after passing the Senate Thursday night, avoiding a government shutdown tonight. The legislation was approved in a 69-31 vote, and the bill includes $13.6 billion in humanitarian and security aid for Ukraine. Meantime, earnings are still rolling in. Rivian shares are tumbling nearly 7% today after reporting a steeper than expected loss in Q4. The electric vehicle maker reported an adjusted per share loss of $2.43 on $54 million in revenue. Now, that was worse than analyst expectations. The stock hit a new 52-week low today after hitting a new low on Thursday as well. Rivian warned about continued supply chain struggles for production and a, quote, slow start to Q1. The company expects to deliver 25,000 vehicles this year after delivering nearly 1,000 in Q4. DocuSign shares, meantime, are plunging nearly 22% on weak fiscal 2023 guidance. The online document signing site reported fiscal Q4 adjusted earnings of 48 cents per share on $580.8 million in revenue. Now, that was in line with analyst profit expectations and beat revenue forecast. DocuSign also announced a $200 million stock buyback program. DocuSign, though, forecasts that fiscal 2023 total revenue will range between $2.47 billion to $2.48 billion. Analysts had forecast $2.6 billion. Oracle shares, though, meantime, are up about 1%, shaking off a fiscal Q3 earnings miss. The company reported adjusted earnings of $1.13 per share on $10.51 billion in revenue. That missed analyst profit expectations but was in line with revenue forecast. Oracle said its profits were dragged down by investments in gene sequencing company Oxford Nanopore and ARM server chip maker Ampere Computing. But the company remains optimistic about the future of those investments. Oracle said, quote, "We remain confident that our investments in these two cutting-edge technology companies will deliver very strong returns." And Ford is following GM's footsteps, partnering with a California electric company to use its electric trucks to power homes. The automaker will collaborate with Pacific Gas and Electric in Northern California to evaluate using the F-150 Lightning to power homes. Now, the truck would be used as a generator in case of a power outage. Ford says that truck already has that ability as part of what the company calls intelligent backup power. Now, the agreement with Ford differs from GM's because the two sides are also exploring a bi-directional charging system. That would allow the F-150 Lightning to also return power back to the grid during peak hours and then charge during off-peak hours at night. And the economic data of the day is focused on consumers. The University of Michigan's Consumer Sentiment Index falling more than expected this month amid rising inflation fears. The index dropped more than 3 points to 59.7 versus economists' expectations for 62. Confidence in current economic conditions fell 0.4 to 67.8, but the expectations index plunged 5 full points to 54.4. And consumer expectations for inflation hit a 40-year high. Respondents to the survey forecast inflation will be at 5.4% a year from now, up 0.5% from February, and the highest since 1981. Expectations for inflation over the next 5 years, meantime, held steady at 3%. So how are you feeling about the future path of inflation? Let me know in the comments. The Fed does meet next week and is expected to enact its first rate hike. But interest rates are still far behind, and we aren't expected to see any impact on inflation until at least the second half of this year. Hope you all have a great weekend, and I'll see you all back here for the Wall Report next week.